Capital was easy. Anybody could have a startup. Management is more important.
You have to really listen to what people are saying because they may not always say it in a way that is easy to understand. Once you get to the point of identified problems, then let's creatively solve what are the big problems and what decisions do we need to make. Do a little experiment and find out if it works. And if it doesn't work, well,
If you've been feeling the pressure of inflation, grappling with labor shortages, or wondering how global shifts will impact your bottom line, well, our guest today, Karl Maier, is a seasoned CFO and business advisor, the founder of Abundant, and the author. Guys, we're going to get the book. I want you to go in the links below and grab this book right now. It's called Surfing Economic Chaos, How American Business Can Prosper Despite Globalization's Collapse. And we're going to get into that. So this is going to be a fun podcast for you all. Karl has a proven track record, doubling sales at 5 companies in just 2 years. He challenges our long-held assumptions about how the world works. And in his book, he lays out a roadmap for American business to not only survive, but thrive in the new post-globalization era. Thank you, Karl. Appreciate it. Thanks for being on the podcast today.
excited to be here, Jason. This is great.
Yeah, I want to get into your book right off the bat because was so interesting to me. Surfing Economic Chaos. It's really challenging the view of globalization. And you describe it as collapsing. And I know we have global demographics and trade securities, but could you elaborate on what you mean collapsing?
Question. So globalization is really something that we've only truly seen since World War II. Before World War II, you had international trade, but France would trade with their colonies and England would trade with their colonies. So it was international, but it wasn't truly global. And there's a lot of things after World War II that drove the United States to protect the global oceans, to have this security agreement that kind of was counteracting the Soviet Union and later to lesser degree Russia. Well, Soviet Union's gone. The demographics are changing. The U.S. Navy is a very different thing than it was even 50 years ago, much less, right after World War II. And so all these things combined together to go, the U.S. is like, we don't need this anymore. And we've spent a lot of money and given up various things, given up a lot of our manufacturing, spent a lot on defense, protected other countries in order to make globalization work. And I was trained in economics in college, and I get economics and, of globalization. It makes a lot of sense to globalize. We build our special, we build the software here and somebody builds the, tires here and we all bring it all together and that makes sense. But there's an underlying assumption there that very few people really talk about is that you have to have the security that your ships can move across the ocean without anybody bothering them.
Uh-huh.
And for the last 75 years or so, the U.S. has done that. And if we get tired of doing that, then that assumption in and of itself makes globalization really, really, really hard.
What do you think, when you're talking about the ocean trade routes, but you have global population aging too, and you talk about that in your book. What does that look like to you? Will we look at Japan or will we look at China and some of these others?
Yeah, Japan has been the kind of leading, the canary in the coal mine for us. They started after World War II, they industrialized, they urbanized. And when you move to the cities, you urbanize, you move into condos, these high-rise towers.
Karl, you introduced the 5-star model as a way to evaluate a country's self-reliance and industrial economy. And you use a lot of things like energy, agricultural, foundational resources. Can we get into that a little bit, your 5-star model?
Sure. The 5-star model, is there's different things that a country really needs to be independently successful. If you've got all 5 of those things, then you can be you're a power in and of yourself, maybe regional, but you can be a power. If you lack some of those things, you're going to be dependent on somebody else. So, you need food, you need energy, you need a population, you need to be able to defend yourself. And I'm, of course, missing one right here. So I've got that little brain gap there. So yeah, you've got to have the raw materials. Sorry, don't worry, that loss comes, but you got to have the right raw materials. So if you've got all 5 of those, you're really strong. So basically, the 5-star model is taking those things and saying, how are we doing in each of those 5 areas? And so the U.S., to kind of cut to the chase here, the U.S. is really strong. We're energy independent. We've got 2 oceans that defend, help us protect us from other people. The Midwest has got the most productive, largest agricultural sector in the world. We've got pretty good demographics, especially if you consider NAFTA and bring Mexico, which has even got better demographics. Bring those things in, and we've got the raw materials that we can mine to create steel, aluminum, and most other raw materials. So you get countries like France and Turkey and the United States. They have those things. They have access to all the things that they need. At the other extreme is countries like Germany, which really has very, very poor energy resources. China has got a lot of things that, are great. They've got a huge population, they've got mountains around them, but they also have a lot of things that are a real problem. They have very weak energy. Their demographics are terrible, and they're just so dependent on international trade, and they don't have the Navy that can project across the oceans. And so they're ranked very lowly. Country like Australia is a really interesting case. It's got a lot of good stuff going for it in terms of natural resources, sensibility, decent population, but they've become so dependent on China over the last 30 years that they're going to have a lot to deal with. Each country comes out a little bit differently. We mentioned Japan. I think I was talking about Japan earlier, and Japan was the first country to go through the demographic decline. They industrialized earlier, they urbanized very quickly, and they started having fewer kids since you're living in cities instead of out in the country. And so in the mid-90s, their population got so old that they had all these old people, and old people don't spend as much. They just don't. They're saving for retirement. So they didn't have the young population to buy the consumer goods, the houses, the cars, spend money on the kids. So Japan's a really good case for the demographic situation that a lot of other countries are now seeing, that China and Germany and Italy are seeing, where their population is just aging to the point that it's really hard to support 3, 4, 5 or more retirees per worker. So that's what the 5-star system is about, is, what countries are going to thrive and which ones are, Germany's done really, really, really well since World War II. But without energy, without a young population, it's not a great time to be in Germany.
No, that makes sense. And, for a leader here in the United States that has a small to medium-sized business, which of these 5 factors do you believe will present the most immediate, impactful challenges, or even opportunities? Let's do that, challenges and opportunities in the coming decade.
The opportunities for a company in the United States, and we've got this particular year in 2025, we've had a lot of dynamics going on. So, just the uncertainty of what's happening right now is a factor that I think is slowing a lot of companies, big and small, in terms of, do we reposition? Do we move forward? How do we do that? So I think that's a factor that we should make sure to just include in there. I think the demographics is something that is hitting a lot of companies. It's really just starting to hit companies over the last couple years. The fast food restaurant industry has seen wages skyrocket, right? In 2019, I live in Houston. So in Houston, if you wanted to get a job in fast food, you should expect minimum wage. And within just a couple of years, now it's like $15 to $20 for somebody in fast food. Wow, that's a big impact on your, the bottom line for those types of companies. The other industry that's seeing that kind of impact to the demographics is the trades. So the electricians, the plumbers, the HVAC, the welders, those groups, the average age in those trades in the United States of those workers is 58 years old.
Wow.
Yeah, that's amazing. And so what you get is, for every 10 people that retire from one of those trades, they're only getting 3 young people to come into the trades. And, with supply demand, it doesn't, take a lot of analysis to figure out that the wages are going to be going up significantly for those trades. And that's going to continue for the next, 5 or 10 years. I think understanding the labor for your particular industry is going to be really important. And, one of the very popular topics in the news is manufacturing. And I'm a big fan of bringing manufacturing back. I talk about that in the book. So I'm very on board with that. I think it's a long-term trend for many reasons. But I think people need to keep in mind that manufacturing 50 or more years ago is a lot different than manufacturing today.
Yes.
There was a clothing manufacturer that brought manufacturing back. It was actually to the Carolinas area, which is where 50, 75 years ago, there was a ton of textile manufacturing there. But that was back when they did it before, employed a ton of people. At this point, it really is very, very automated. And so the number of people is much smaller for that employment. And the type of worker is very different. It's not the high school educated. Typically, it's, people who are putting robots in place, programming the robots, those types of things. So manufacturing's a different world than it used to be.
Yeah, and I agree with you 100%. And, whenever you look at all the convergence of the different technologies that are coming on the scene, and I get the whole idea of bringing it in-house, with it, whether it's AI, whether it's robotic, whether it's gene, sequencing, all these different technologies are kind of, people don't realize it yet, but they're all coming together and then they feed off of each other. So if we're going to have that, and then we have to be reliant on, like our pharmaceuticals with China or, some of these other areas, I get that 100%. I want to get into, because I want business leaders to understand, and your analysis highlights in the book that a lot of countries will struggle, but the United States is uniquely positioned, and you go and give it 5 stars in your model. And with the geographical advantages, the naval power, which we talked about. One of the things I thought was interesting was the millennial generation's consumption habits. That being, and it's a fairly good size. I mean, I don't think it's as big as, it's not near as big as boomers, but millennials are a pretty good chunk of our population, and they have a lot of consumption habits.
That's right. Yeah, they were a little smaller than the boomers. They're the children of the boomers, but they're bigger than the Gen X, which is in between the two, and they're certainly bigger than the Zoomers, which follow the millennials. So right now we've got a strong cohort of roughly, 30 to 50-year-olds that are spending money. And that's a great age range for spending money. And so, that's fantastic for the U.S. economy. That's like something like 70% of U.S. GDP is tied to consumption. So we're very dependent on that. And we're one of the few countries around the world that has a large population in that age group. Almost every country around the world, after World War II, there was a big burst of births. So baby boomers, that's a pretty much global phenomenon. But the millennials is not. So that differentiates the United States. So that's one of those powerful things that I think helps set the U.S. apart right now.
Yeah, and I think people don't realize, and you put this in your book, Karl, is the end of cheap money. Like right now, a lot of people don't realize, but the interest rate is pretty much average what it's been, but we had it so low for so long that we got used to, having cheap money. I mean, capital was easy. Anybody could have a startup, pre-COVID, anybody could have a startup. And next thing you know, you could get private equity to give you $1 million. The stock market was just, constantly going up. I mean, we had one of the longest bull markets. So for leaders of small and middle market companies, because I know that's who you help a lot, what's kind of the most critical financial ratios or capital metrics, or what should they be really diligently tracking?
Right. I'd say the one kind of overarching thing that the business leaders in that segment should be looking at, that they probably haven't had to look at over the last 20, 25 years, is return on your capital, return on assets. ROA would be the kind of the accounting kind of metric that I would look at. If I'm going to put a machine in place, if I've got land that I'm using, if it's a building, whatever capital expense that I'm putting in place, am I getting a return? I should be getting that. Putting that asset in place takes capital, it has risk. I should be getting a return on it. And for, most small to medium-sized businesses, that kind of lower middle market, the whole company should be earning like 25% return on capital every year. That's kind of what it takes to really compensate for the risk of that company. And that's a little bit more than I think most people have expected. And so think about, are your assets getting a good return? That's really, a very simple concept, but it takes a minute to kind of break out, well, if I've got these pieces of equipment and together they're worth $1 million and the land's worth $1 million and the building's worth $500,000. Well, I've got $2.5 million worth of assets. Even what's 10%? Well, that's $250,000 a year just, to hit that 10% return.
Mhm.
And so once I say, okay, I've got that, then I've got all my, paying people and other administrative expense, whatever else I've got, am I still making money? And, or am I really better off just, buying bonds or, something like that, putting money in the stock market?
Yeah, I know it's interesting, and I know in the book you talk about the era of expensive capital and labor. Labor's gotten with inflation and everything going on, and you talk about management is more important. And I read on Meta, which was Mark Zuckerberg. I think last year he had the thing called the Year of Efficiency. And then they went through and like the upper management people, I think they kind of just fired most of them and kind of went through and then he started working on what does efficiency look like in management, because they had hired too many. Why is managing more important now? Because I know you advocate for strategic opportunity planning, and we'll get into that, but can we talk a little bit about management?
Basically, since like 2000 to say 2020, we've gone through what in many respects, especially in the United States, has been one of the easiest times to manage a company probably in history. We've had a very stable workforce in terms of both cost and number of laborers. We've had low capital cost. It's been a pretty stable, environment globally. And there's been wars, don't get me wrong, but we haven't had major disruptive wars. And so it's been kind of easy, quote, quote. With the changes to the demographic mix, the labor force is getting much, they're getting more power compared to the business owner or to capital. So that power really, you've got to treat labor differently than you did, 20, 30, 40, 50 years ago.
Yes.
You've got to manage your capital. You've got to deal with the complexity of a very rapidly changing environment right now, the uncertainty with the political environment. So all these things together are complexity, and that's kind of the definition of management, is fixing all those problems. So the quality of management means a lot more these days than it did just a few years ago.
Yeah, and I know, like I said, you advocate for the strategic opportunity planning, process involving, and you talk about it being confrontational discussions. And I know you've gone into businesses and, you've had to either have or encourage, challenging assumptions. What does that look like for a leader, having that vigorous discussion or having dissent, because you know as well as I do, when you go into, there's kind of like this lackadaisical, we've always done it this way. Maybe it was, third generation, something like that. And so, Susan's worked for us, she's been in the back office and she's worked for us for 30 years, where Susan's been, I had this with a company I work with where Susan's been skipping for 30 years, because she was the only one that knew what was going on with the books, So I know you talk about Alpha Peace Loans approach with General Motors. How do you get to the effective decisions, or what do you do when you go into a business and you have to challenge these assumptions?
Right. Sometimes a leader will say, I see problems coming, and because I see problems coming, I want to proactively get out in front of it and do things. What do we do? And so they're asking that question. Other times it's more of a reactive, oh my gosh, we lost that big contract. We've had this problem, and how do we react to it? So you've got kind of different ways to lead into it, and those are going to bring slightly different approaches to how you have those conversations. But once you get to the point of we either see problems down the road or we've already identified problems, then let's creatively solve them. Let's not just say, yes, that's the way we've always done it, or I'm at the top, I've got all the answers. Let's really go into the organization. Let's go talk to customers. Let's challenge assumptions. And that just, anytime you change people's behaviors, that's stress. No, it's a lot easier just to say we did it that way and we're going to keep doing it that way. But necessity is the mother of invention. So, if we've got, we're now in a world where we've got inflation and higher interest rates, and we've got labor force challenges and supply chain disruptions, all these different things. You need to have some tougher conversations. It doesn't mean you need to say all decisions in the whole company are up for discussion, but it does mean that if you want to draw out that information, you've got to be an active listener. You have to really listen to what people are saying, because they may not always say it in a way that is easy to understand. What are you talking about? Why is there a problem? It doesn't look like there's a problem there. And you've got to tell me more. Let's dig into that a little bit. And if you can suck some of those problems out, they turn from problems into opportunities. Well, maybe if I had a company during COVID that was doing cold brew coffee and delivering it to offices. Well, boom, all the offices shut down. Well, we were able to pivot, take some of the expertise they had, and next thing you know, we were bottling hand sanitizer. And the company made hundreds of thousands of dollars off hand sanitizer till the coffee market came back.
That's awesome. And I know you're like, as far as being fractional CFO and, spending years and years as being a CFO, what are some of the things when you go into a company that's just kind of like a red flag to you? Like they open the books to you, you start going through it, and then it's almost like, holy shit, why has this even been happening? Have you seen a trend here in America with companies?
Well, I do think over the last 20 years, companies haven't had to kind of live up to some of the same standards that they had to before. I'm old enough that I remember around 2000, I partnered with a guy who's 10, 15 years older than me, and he'd been doing turnaround work and helping companies that were lower middle market, and they kind of get sideways and help them clean up and get new bank loans and all these things. And we started working together, and he was really, really shocked. And I was quite surprised that we'd get introduced to these companies after the dot-com crash, and they were like, wow, this is in our industry, it's classic problems, we can help them. And we'd present to them, and then they'd come back and talk to us in like a week later, and they're like, yeah, I hear what you're saying, but the bank just offered me a loan, and so that's going to solve my problems. So I'm just going to and you're like, oh my gosh, a bank loaned you money? Your books are messed. You don't have processes. You're not that profitable. It's just like,
You're going to throw money at the mess. Yeah.
right. And so, so that's just one aspect of it. But now that things are getting tighter with the capital, the interest rates are going up. Banks are not as aggressive about loaning money. And so, that's, you need to be more creative. You need to manage better. You need to have those discussions.
Yeah, I know. And, I know you were talking about, like pivoting, like you just mentioned the coffee company, but like what specific manager operating system tools do you recommend for these companies? Is there something that they can do to adapt their business, to these ongoing challenges or this new economic reality? Because I still think people don't understand that they're coming into a new reality. What's kind of the strategic planning? How do you approach that?
That's a good question. So I try not to go too high level on the strategic planning. Big companies, you see them spend days or weeks coming up with a strategic plan that gets put on the shelf and nobody really adopts.
Right.
So what I try and do is something that's a little more nimble. And one of the key things is just a weekly management meeting, 90-minute weekly management meeting. You get your top, 4, 5, 6 people or however many in that meeting, and you spend 30 minutes, and we have a system to help you systematically identify, hey, what what are the hot buttons? What's going on? What are the red flags we need to look at? What do we need to talk about? And at the end of that 30 minutes, the team prioritizes what the biggest problems, the lowest problem, well, at least the top few problems, and let's start talking about those. Methodically go through those for the next hour. And I've got some tools that help that conversation. So that starts to become a strategic process. So, what are the big problems and what decisions do we need to make? We follow that with structured one-on-one meetings between managers and their direct reports, whether that's the CEO or, down the line. And then, we like some simple tools for helping people to evaluate their team, to do that quarterly. And so those are kind of at a high level. And there's a number of kind of management operating systems out there, that you can look at. Pinnacle and EOS is another one. And so some of those have some of the tools that I like to recommend. And I think combining that with, solid financial information, good KPIs and metrics, you put all that together, and I think you start to get what looks like a strategic process pretty quickly.
Yeah, it's so interesting because, I know a lot of medium-sized small business can't afford a full CFO. So, that's a thing right there. But they at the same time, it's either I have a CFO or I don't. And then it's up to me as the entrepreneur to go through the books, or I may hire, somebody for, 25, $30 an hour or whatever that's doing it and may or may not, have that experience. You've seen that over and over again. And I know you have a concept, economic value added analysis, EVA. In a practical terms, like if you can't hire a full CFO, what are some things that you can do? I know you can hire a fractional CFO, but what are some of the things that you can do, to be able to move your company forward and, especially being identify these profitable opportunities, if that makes sense?
Right. Well, there's certainly more and more software, and some of them are AI related software
Mhm.
that's out there that can help those smaller companies that maybe aren't even ready for a fractional CFO, or want to supplement something, fractional CFO, in terms of, helping you understand what are the big changes in your financials, quarter to quarter, month to month, year to year. What are the trends, and AI actually, and I think QuickBooks has got starting to build some of this in, and other tools like that, and just saying, well, let's look at the numbers. So you need to look at the numbers, you need to look at the people in your organization and communicate effectively with them. And of course, you need to look outside. You need to look at the market, what are your competitors doing, and, make sure you're talking with your customers. So, none of that's rocket science, but that's all hard work. And as you grow, you need to build a team, some way, some form, that can help you do those things, because any one person has only got so many hours in the day.
Yeah, and I know, one of the things is as far as like market opportunities, and you delve into the ratio principle, the 80/20 analysis, but you do it for customers and products. And beyond identifying, the most profitable segments, which you have tools for that. But if you need to, because you talk about firing the unprofitable customers or, eliminate, because I see this so much. It's like the bitchiest customers are the ones that are the least, they give you the least ROI. And a lot of people have legacy products that they may have some sentimental attachment to because their father, made this, and we've done this, and that product's actually sitting on a shelf losing money. Can you get into, because I think this is really, really important. Can you get into unprofitable customers and products?
Right. So unprofitable customers, for any salesperson, that hurts just to say those words.
Right.
Because you did, whether, somebody went to a lot of work to bring that customer in-house. And now you're telling me that not making any money. And especially if you've got a salesperson that's paid on sales, they're like, they're making money, they're making me money.
Right, right.
So you've got to build in your whole organization that, let's evaluate this. Are we doing enough volume? Are we doing enough volume with the products that we actually make money on? Oh, well, we sell this, we sell bikes, but we also sell, chain cleaner or something. And so, we've got to have that. Well, do you? I mean,
Right.
if most of your customers are getting it off of Amazon, you may be like, we're keeping, a carton of this in stock all the time. So it's back to that challenging assumptions. what really makes a good customer? What makes a customer profitable? I've definitely seen companies that have fired, 20% or more of their customers and watched their profits go up. And until, it's hard to believe that that actually can happen, but it really, really can. And it's the same thing with products. I mean, if you're just a service company and you've got essentially one product and that's service, yeah, not, don't spend a lot of time on that. But if you've got, you know, very different services or you've got different products that you're selling, you know, that can be dramatically different. The bicycles, you've got whatever margin on, and, the cleaning tools, have a very small margin, but maybe the bicycle helmets have a great margin.
Mhm.
Whatever it is, yeah, spending a little time to look at that. I've got a chemical company, a chemical blending company that I've spent a lot of time working with. And, they've got like about 10 products. And so you're like, how complicated could that be? But they've got different mixes of input chemicals to make these output chemicals.
Mhm.
What we found was, they had two markets. They had a construction market and an oil field market. And, I said, we should look at this. And the president of the company told me, yeah, it's a good idea. Spend a little time looking at it. But I'll tell you what you're going to find. You're going to find that we make all our money over on the oil field company and, we kind of break even on the construction. And I'm okay with that because, that brings us, covers overhead. So I did the analysis and I came back to him. I said, well, you're right. You are making all your money on one sector. It's the construction business. And, he's like, what? Oh my gosh. I thought it was the other way around. And no, you're breaking even on the oil and gas, which is where you should be making money. And so we started increasing prices, talking to customers, making changes. And, that really drove up profits. And they, that's where their future opportunity really lies.
Do you think that's so good, Carl? Do you think how many entrepreneurs that you talk to, business owners, let's say middle-sized companies especially, that have these blind spots they don't even realize? Or they're completely wrong.
Right. I mean, we're all human. We all have blind spots.
Yeah.
So it's just, how big are they? We all just kind of have to acknowledge we're not perfect and we're going to have some, and sometimes those blind spots are, there's a person that I really kind of subconsciously don't, judge very closely because they're like an old buddy or I just kind of like them and fine. And maybe that's not a big deal in the company, but other times, it maybe there's a couple key people that I'm letting slide and it's hurting morale on the entire rest of the company. So I'd kind of say it's not a matter of if. We all have blind spots. We're just, no, I do, so it's just a question of how big they are and how much it hurts you.
Yeah, this was really interesting. I did a podcast a few months ago and I had a guy, he said the three biggest problems for small business is payroll, and sales. And I thought that was so good, because, and I know you see this over and over again. It's like, how many companies, it's like, how have you operated this long? It's like you stress out about payroll every time it comes rolling around, and then it to barely get the money in and there it is, Do you, and I know you talk about like mix and matching business models and a flywheel concept, but when you're looking at these businesses that are just kind of skating by constantly, doing the same thing over and over again for decades and decades, barely making payroll, do you come in there when you have a conversation, with the leaders? Do you come in there and start trying to get them to find a different business model? Like, how does that work? And how do you introduce a flywheel to them?
Well, the first thing is, it's the business owner. They're the key to the business. And they're, in my experience, the business owner is the limit of growth to the business. If I've got a business owner that's constantly, challenging, the assumptions of, how, is that really working? They're constantly looking at the numbers. They're constantly talking to their employees and customers. I'm like, I don't know exactly when, but you're going to make it to 10 million and 100 million and you're going to do great. And I walk in and I see another entrepreneur that's telling me how hard things are. I'm, barely making payroll. And, say, well, if you thought about trying this, yeah, but, this reason, that reason, what about trying that? Yeah, but this reason. It's like, well, I think we've just found the issue here.
So you think it's like a adaptation problem or like a willingness to not change from the leader itself?
Yes, I really have. I had one entrepreneur, oh my gosh, this guy could sell. I mean, one of the best salespeople I've ever seen.
Mm,
They go out and make multi-million dollar sales here and multi-million dollar sales there. But at the same time, they fell in love with their inventory. And, it's like, oh yeah, well, I had this $2 million sale. And so I talked to the manufacturer and I was able to get a deal. And so I bought an extra $250,000 worth of inventory. So I've got that on the shelf. And it's like, dude, it's not selling. It's been there for 2 years now. Even if you sold it for your regular markup now, you still lost money. Yeah, yeah, yeah. No, no, but and it's just like, and you couldn't talk him out of it.
so he put the sales because he got a good deal. He didn't even think about like inflation or what it looks like as far as, time decay, all those
Right.
things. He didn't look at any of that.
He had this vision that there'd be a point in time when there'd be a big shock to the market and he'd be able to unload this inventory for a gazillion dollars.
Oh, right, right, right.
So, and, that's just one example. Everybody's got a different, perspective. But yeah, if you're in science and you go say, I think that, this is going to boil at this temperature and you go test it and
Right.
it doesn't boil at that temperature, it's a different temperature. You're like, well, okay, now I know, now I'm going to make an adjustment. Business is like that. You can try things out and say, hey, I'm going to go talk to customers about this new product and see if they're interested. I'm going to do a little experiment and find out if it works. And if it doesn't work, well, I move on. I try something new. So yeah, adaptation is really, really, really important.
Yeah, I would imagine, especially when it comes to, because a lot of the blind spots are probably that in and of themselves. Do you see everybody, like you just mentioned, that one entrepreneur, like they're just relying on their strengths and not understanding or hiring for their weakness or any of that?
Yeah, there's a variety of different examples. I've got a friend that is a really good guy, enjoy the heck out of him. And he's been in this one industry his whole life, and he's in his 50s now. And he'll tell you, he's real clear about this industry is in decline because, this cost structure's changed. It's really, really hard to make any money, not just me, but for anybody in this industry to make money. And I'm, like, well, have you thought about going to this adjacent industry? Yeah, no, no, that's just not where, it's like, I don't know what else to tell you. It's not like I had that conversation with you once. It's like over the course that, it's like I've had the same conversation every 6 months for the last 3 years. And,
Mhm.
you know, it's easy.
Yeah, even if you want to use your business for retirement, how are you going to sell something that no one wants?
Right.
10 years from now when you're 65 or whatever, 60.
Right. Yes. And that's why, I mean, there's a lot of businesses that get sold. I've been involved with many M&A transactions over the years. But there's also a lot of companies that just, it's just you working hard in a marginal market.
Mhm.
Nobody's going to buy that. You get to 65 or 70 or whatever age and you want to retire and you got nothing to sell. That's kind of a problem. So
No, that makes sense. I want to get into the fractional CFO stuff because I think this is so cool nowadays, the way it is, because, entrepreneurs have that blind spot. And a lot of them, like you mentioned, the guy that does sales, he probably doesn't. Most people that do sales don't really not into numbers, or they may get the email for the monthly report or whatever it may be, maybe glance over the finances, or they'll look at the bottom line, say, oh, we broke even, we lost a little bit of money, or we made, oh, wow, we made the payroll and we made a little bit of money. How important is it to bring somebody on as a fractional CFO? And what does that look like? I mean, is there a certain size, because I know you've come in and helped companies double. I mean, that just blows an entrepreneur, mind. Like if you, it's like double my business. Like, what the hell is that? So what size company, when should a company start looking at having this conversation about a fractional CFO?
yeah, it's going to depend a little bit based on the industry. If you're, an asset heavy industry, you're going to be selling $1 million a lot quicker than, if you're purely service. And, if you're just trading commodities, you're like, we sold $100 million last year. How much you make? I made 200,000. It's like, it's like, wow. Oh, okay. So you were just taking up a tiny percentage off of this, so it's hard to just say generically sales number, but, if you're in a manufacturing, environment, so, as you're kind of passing that kind of, certainly, after you're passing 5 million, but after you're 2, 3 million, that's probably, the point, you've got some complexity here.
All right.
If you're more of a service business, you may just be breaking past $1 million and starting, now you've got all these different people and you may have some complexity, at that point. So complexity is kind of a combination of people and, your products. And so if, complexity is what I think drives, I need help.
Mm-hmm.
So the more complexity you've got, if you're at $10 million and you've got a bunch, you've got 25 people and, a dozen different products, it's like, you probably want somebody to, unless you're really, really strong in that area, you may want to look at, getting somebody to help you out a little bit.
No, I love that. And I want to close in this. In your book, you had an amazing, powerful idea. I don't know if you came up with this or if you've heard it before from somewhere else, but you talk about being the chess player, not the chess piece, especially in this economic chaos. So a leader, and I talk to them all the time, Carl, and they're this way. They feel like a chess piece. They're overwhelmed. Things are going too rapid. Changes, there's multifaceted changes going around, and you even go through your book and describe that. What's a mindset shift, an actual something that they can start, to grasp a hold of this? What can they adopt starting today to be reactive, not be reactive, but be proactive?
One of the things that I see is that when I go look at somebody else's business, and anybody goes and looks at somebody else's business, it's usually, fairly easy to pick out a couple of big issues, because you're removed. You're not personally, it's not you. But if it's me, I feel like I made this decision, so I don't want to back up on that decision. And so to me, the mindset shift is kind of changing. Instead of saying, this is my business that I'm looking at, it's like, well, if this was somebody else's business,
Mm.
and I'm just taking me out of it, then I think all of a sudden you're going to say, if this was somebody else's business, what would you tell them? All of a sudden it's be like, well, phew, yeah, I would tell them that.
Yeah, no, that makes that makes so much sense because our egos a lot of times can get in the way, especially when we have our baby, and the baby may not be exactly what we've MRI. I don't know how to pronounce that word right, but we've kind of morphed it to the point of to where it's something that we're seeing that everybody else, it's like there's red lights all around, but we're like, no, we can go. It's green, and you deal with that all the time when you come in. But, I want to thank you for your ability to, like in the book, Surfing Economic Chaos, to break down complex global economic shifts, especially for business owners to be able to have an understanding of the challenges, because I think it's so important. I did a study last week with a bunch of business leaders, and all of them said that they needed clarity. It was like 80%. I was like, do you need this? Do you need this? Do you need this? I gave them like 5 or 6 things, and everyone went to clarity. So I think, as business leaders, what you offer is a clear vision and disciplined capital management and strategic market positioning, along with wrap that with effective leadership, and I think that's what your book pushes, through communication and accountability. And so I think it's really, really important, especially in these unprecedented times. So I thank you for writing the book and for being on the podcast today.
I've really enjoyed it, Jason. Great questions, great conversation.
Thank you.